to do a video regarding REITs. So, what is REITs? Is if you guys want to start investing in real estate, and you don't have a lot of money, you don't have a lot of down payment or money to buy property or whatnot. There's other ways to invest in real estate out there. It's called REITs, Real Estate Investment Trust. So what is REIT? It's a real estate investment trust. It's a security that trades like a stock on major exchanges and owns and in most cases operates include income producing real estate or related assets. You don't have to even have a lot of money. You don't have to be rich or wealthy to invest in REITs. And it's really like about REITs is because you can find a lot of REITs companies. There's a bunch of companies out there, realty, income, all of these companies you can sort that qualifies as a REITs companies. You can search one by one and see what their minimum is. So there's all kinds of REITs out there. Um, so there's a bunch of them. You can go through all of them. So when comparing potential return, it can be helpful to look at benchmarks. Okay, so the Congress created a real estate investment trust in the 1960, a way for individual investors to own equity stakes in large-scale real estate companies. So are required to meet certain. This is what I like about REITs because the return a minimum of 90% taxable income in the form of shareholder dividends each year. So 90% of the income needs to go back to the shareholders. So if they pay that out, invest at least 75% of total assets in real estate, receive at least 75% gross income in real estate, have a minimum of 100 shareholders after the first year of existence, have no more than 50% of shares held by five or fewer individuals during the last half of the taxable year. So there's a bunch of REITs. You can look and search through that, the return to expense ratio. So the expense is very important as well that you need to look at how much, the expense ratio is usually a little bit higher. Some of them are lower. There's a bunch of them out there. Um, you find this, you could, if you want to, buy this REITs in one of those brokers, you can. There's a lot of REITs out there. It says it's for there's equity, mortgage, and hybrid. So REITs operate like a landlord. They handle all the management tasks associated with owning a property. Mortgage REITs, also known as MREITs. REITs don't own underlying property. Instead, they own a debt security backed by property. There's hybrid REITs, or combination of both equity and a mortgage REITs. These businesses own and operate real estate properties as well as owning commercial property mortgages in their portfolio. So they have both equity and mortgage. So there's even a private REITs, public non-traded REITs. So, the good thing about it is a steady dividends, high returns, liquidity, and lower volatility. Of course, there's some cons as well. So, you want to be aware and get familiar with REITs, and you want to know what the minimum is, what the taxes that can imply, what is the exit strategy, how long do you have to keep the money in the REITs of the platform. There's a bunch of them out there. Just gonna name, like I will tell you right here. There's minimum. There's a bunch of REITs here, company, and it tells you the minimum, what they offer, what the minimum investment, what kind of deals, what REITs, what is this, what kind. Um, and even tell you how many members they have. So there's a bunch of them out there. You don't have to be wealthy and rich to start investing. um, so there's one here which is Fundrise. It's also REITs. um, they even have they have expensive portfolio. They have also like a membership. If you want to advance more to your portfolio and own more in your portfolio, you can. They even have private credit here that you can um, invest in. It's an asset class that consists generally of loans, fixed income, or other structured investment that aim to deliver higher yields with lower overall risk when compared to equity investments. They even have venture. Um, they even have invest portfolio companies and venture capital fund that you can invest in. Got a lot of these companies that wanted the fund, needed the fund. You can invest in those, and it's growing. I never seen this before, but now it is. It's there. You can even, that fund that you can you can invest in. There's a minimum that you can invest in there. I think I like about the fundraise because I think that you can start investing within $10. You can even sort of automatic transfer, which I do in my account, and start doing that. Even with these fund, I don't think you have to spend a lot of money. I think minimum is at least $10 and up, so it's not that bad. How much do you want to spend on this platform? Um, they want to be also prepared and research a bunch of these. Those are Broad Street. You want to look as well if it's for accredited investors. If you're not an accredited investor, so accredited, you have to have at least $250,000 net worth. Realty mogul. So a lot of the REITs are passive income. That's what I like about REITs because you don't really have to do anything to the account. You don't have to do anything. You just put your money in there and let it work by itself, and they manage everything, management, um, all the properties management, everything in there. So it's really passive. You don't really have to do anything. There's another one, Diversifund, Yield Street, Streetwise. You want to look at and see, what the dividend payments, how much is the amount, the yield. So you might want to. There's also roof stock. So, and then like Pure Street, I think there's a minimum. This one is they invest in loans to give lenders capital to support real estate borrowers. Pay and then the borrowers pay monthly interest on the real estate loans. Then you get paid. You receive your share of those monthly payments. So it's really good as well. I think they have a low amount of entry. You want to also look at the expenses. So like for Streetwise, this one is also REITs, generate passive income, open to all investors. So that's good. It's for non-accredited investors. Mostly, a lot of people are not accredited, so that's also good. It says here 500 minimum in shares. 500. There's a minimum as well. Same thing with Yield Street. You can diversify your entire portfolio. You can add private markets to your IRA, solo 401k. You can even put your 401k. So the Yield Street, I believe they have more amount that you have to put in here. But the good thing about this one is they have a lot of asset classes. They have pretty much a lot of the one that we talk about: private credit, private equity, diversified funds, venture capital, structured notes, short-term notes, art. They even have art here, legal finance, real estate, transportation. So it's a good also platform to put and invest in. You might just really check what is the exit strategy, how long you have to keep the amount in there, the account, in order for you to withdraw the money. This is all alternative assets that you can invest in, to grow your assets. You don't have, it's really lower barrier to entry, especially if you don't have a lot of money to invest. Same thing with Diversifund. They do gain access to private investments. Um, they do set it and forget it. Same thing as passive in investing as well. It's a multifamily fund, build passive income. You and then you can diversify your portfolio. This one actually does the multifamily fund, so that's really good. And multifamily fund targets apartment buildings where the seller's distress or value can be created in strong markets with one investment. Investors own a share of multiple properties of diversification. So it's a good way to diversify your account. They have also different kinds of plans here. If you have 500 monthly, then you get all of that. You have 25 or 10K. You can really get started 500 a month if you want. You have the capability of doing that. So I like about multifamily too because they're very stable. Um, Also, it's very affordable for renters. There's Spirit Street we've talked about since the loans, and yeah, there's also Arrive. Actually, you can invest. This is for shares, buying shares in the houses. You want to also look at the returns that they've had. What is the targeted invested period? See, it says right here 5 to 7 years, 5 to 15 years. So you want to look into the how long that money needs to sit in there. Yeah, also SEC, there's filing, and then this actually is for. I think the minimum for this one is $100. So you get started with $100. We source of top 1% of properties. 410 properties, then more dropping quickly. So that's a lot you can buy. Minimum, I think $100 for each of these properties, minimum to invest on this. And then you gain shares and then whatever they pay out. They even have four different kinds: single family, vacation rental, funds, um, private credit fund, single family fund. So that's good to diversify your portfolio. They even have a real estate debt, so private credit fund. So same thing that we talk about. Same thing with Honeybricks. They do have a it's a multifamily real estate as well. Help you get fractional access to institutional quality pre-vetted multifamily investment with less fees, lower minimums. So if you don't want to do the trouble and trying to maintain, trying to get that property, get a rental property, manage it, and the other fees associated with that, a lot of these platforms is already doing that. So it's just sit back, relax. Who doesn't want to get paid and just sit back, and you don't really have to do much. You're just making your money work for you, right? That's what you most of the people want to do is get passive income. So it tells you right here, you have to be a citizen or resident. There's no fees to invest. Management team. Specific investment, these management teams are reviewed and assessed by Honeybrick's committee. Minimums, there's $5,000 minimums. You can even use your self-directed IRA and convert the money here. So that's a good thing about real estate. You can use your money, your IRA, your 401k to, you know, exchange that funds and put the funds here and make that money work for you. And a lot of the returns of real estate is really good. There is growth market, experience management, institutional quality assets up to plus 15% annual returns. That's a lot. Low risk strategies and a lot of these properties, all of these REITs, a lot is backed by real estate, backed by property. So it's a good investment. It's very stable. It's good for long term investment. Just do your due diligence. Want to know how much money you have to pay you know, for the entry, like the minimum, how much the fees, how long before you exit and get that money back in the future. So I hope you guys enjoyed the video. There's a lot of information out there. There's a lot of there's no really reason for you not to start. Even fundraise is only $10 a month or a week you can set up. So low barrier of entry. That's what I like about REITs. You don't have to be rich. You don't have to be wealthy and have all kinds of money to start investing in these platforms. I like that we have a lot of technology now, so anyone can do this. So you start little, and it's a long-term commitment. It's really good. Don't look at it as like a short form of investing. It's minimum. A lot of these sites are 2 to 5 years. So keep that in mind if you're investing the money there. Invest the one that you're not gonna need, and you're just letting sit the money there and collect and build that and grow that account. I hope you guys enjoy. Subscribe to this channel if you get value out of this video. Thank you guys for watching. I really appreciate it, and have a good day. Subscribe.